Hello folks, this is Daniel Bennett from Advanced Portfolio Strategies with an educational economic update for May 2018. In this month's video, I'll discuss some of the major headlines that influence markets in April. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Market volatility continued in April, but for the first time in months, all three major domestic indexes ended in positive territory. The Dow and S&P 500 each gained 0.3% in the month. Although both indexes were still down overall in 2018, the Nasdaq added less than 0.1% but remained up 2.4% for the year. The start of corporate earnings season was easily among the most important financial occurrences this month. By April 30th, the majority of the S&P 500 companies had released their first quarter 2018 earnings reports. Much of the news was positive, as 79% of the companies exceeded expectations for their earnings. In fact, by some measures, this earnings season is the best on record. However, while corporate earnings results were strong, stock prices did not experience large jumps in response. For companies that beat their expectations, the resulting stock increase was only on average 0.3%. Why wouldn't strong earnings cause large equity increases? This may have happened in part because investors saw any quick stock price increases as opportunities to sell for profit. But with trade wars, treasury yields, economic growth, and more, investors had many topics on their minds. Let's briefly talk about how some of these topics affected markets last month. The possibility of a trade war between the US and China worried many investors in April. Early in the month, one poll showed that over a third of financial strategists believed that a trade war was the biggest threat to a stock rally. By month's end, U.S. Treasury Secretary Steve Mnuchin was planning to visit China in hopes of preventing the trade tension from escalating further. Yields on U.S. 10-year treasuries were also a topic many investors tracked in April. For the first time since 2014, yields rose above 3%. This level is a psychological benchmark because rising above that rate can cause investors to leave riskier vehicles such as equities. By April 27th, yields had dropped back below 3%. That same day, we received the initial reading of the first quarter gross domestic product, or GDP. The economy experienced 2.3% annual growth between January and March 2018, slower than the fourth quarter of 2017, but faster than analysts expected. Looking back at April, both the economic data and headline-driven news seemed to mimic the monthly performances the indexes posted. There was a lot of action and talk, but the end result was to move just a little bit, but seemingly in a positive direction. That's it for this month's Educational Economic Update. Once again, this is Daniel Bennett with Advanced Portfolio Strategies signing off for the month of May 2018. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 310-776-6549. We'd be happy to talk with you.